Hello, hello. Hello, hello. There we go. Looks like you can see me now. I was gonna say I thought your mic was broken. Yeah, it looks like it's working now. I don't know the software updated, I guess, and then I guess turn it off. I guess for a better word. But yeah, it seems like it's working now. Although not great. I don't know. It should be higher than this. Probably that right there is probably better. Yeah, yeah. I don't know. It resets sometimes. Yeah, there we go. Yeah, good old technology. Can't live with it. Can't live without it. Volume might be a little low. Yeah, it looks like it's in the right range now. I did adjust it. There we go. Yeah, should be good right now, right? It's up in like the higher green to yellowish range. Um, yeah, no, I can't, yeah, I can kind of do it. All right, so PPI data kind of came in as expected. That PPI was higher than expected, the 1.1. The core came in a little bit less, which was actually not horrible. But then the unemployment claims came in higher. So I talked about kind of this combination of kind of if one was high, one was low. And again, bad to the core PPI for messing it up on me. But again, the dollar is just taken off at this point, as it should. I mean, again, remember PPI. You know, basically, this is the price in finished goods and services sold by producers. Um, Biden's comments yesterday about whole it doesn't matter. This is old. You know, fuel prices have come down. Here's the thing. This is the cost of what the change in finished goods and services sold by producers. So it's basically what their costs were. If they have higher costs, they're going to pass the higher cost down to us. So it's nice that the fuel's there, but it's still going to happen. And then the unemployment claim is starting to rise, shows you that the economy is obviously turning, but we're not seeing any kind of lapse in inflation. So there's an interesting article down here, which I think is interesting. I like it a lot. It's a number two over there that talks about basically the risk of deflation is now greater than the risk of prolonged high inflation. And again, it dives into a few different pieces in here, but talking about how looking at a forward indicator, there's some things that are starting to turn in the other direction, and I kind of agree with this one. Um, it's nice that everybody's talking about going back to 2%, but with prices as high as they are, going back to 2% still means we're paying a whole heck of a lot more for things. Where I almost kind of feel like we do need a little bit of a deflationary period to get them back to kind of acceptable levels, and it's just not all based off of gas. So there's one little interesting piece of news today, and then again, Yellen is warning that the U.S. inflation is unacceptably high, which I thought was hysterical. Like, yeah, 9.1%, highest since 1981, right? I love that. The Fed, we're just gonna, we're gonna keep backing the Fed up. What they deem is, whatever they say, sure, we'll do it. She has no opinion, I guess, on it. So, yeah, fun. And besides that, China, their economy is now stabilized and now has recovered in June. So ours is starting to go bad. China's is looking good. We saw that their, exports were up 17%. Their imports were only up 1%. So again, sending a whole lot more stuff out. So they're doing well there. Um, and then again, there was a vote over here for Draghi. But yeah, besides that, again, news is kind of what we expected. We're going to see the GDP quarter over year, which is kind of a weird figure. But again, we'll see what China's data really kind of is. And again, we've already heard they're recovering, so it should be good. But really, across the board, the name of the game. And again, look at this dollar CAD, 200 pips in 24 hours. I mean, that's just a monstrous move. Dollar yen. Dollar yen is up at like 139. Remember, we were talking about, oh my God, 130 is going to be bad. 135 would be the end of the world. Now we're at 139. Um, Again, it just shows you that some people again there are certain words that are going to be added to they don't understand what it means. Obviously, transitory is the number one misused word of all time by the Fed. They just didn't understand what transitory meant, and there's a couple other ones out there. Front loading. We need to front load this, right? We need to put something big in there. We need to front load it. Well, we're like five in, and it's still getting worse. They're front loading. Their big front load just failed. Didn't do anything. So yeah. We're starting to get the demand destruction, but we're not getting anything. So we're going to have like demand destruction where it's going to be horrible, and they're still going to be raising interest rates at this point with inflation going insane. So, but yeah, I mean, look at this monstrous numbers with the dollar and even like the pound. Look at this. You know, euro pound is up 21, but again, we're still seeing 60 over here. Pound yen, 60 over here. Pound dollar down. I mean, there are some big numbers out here, and again, looking at there's the dollar index. I mean, it's just going, but it did kind of the same thing, right? The Europeans at 3 sent it down, but then at 6 o'clock they were like, ha, no, and then 7, 8:30, and then boom, nice spike. I mean, we're at 109.25. I mean, this is $10 higher than what used to be considered like, wow, we're real high in the dollar, right? We're high 90s. They're gonna have to step in and do something. So it's just unbelievable, how far this inflation is just taken off. And again, it's just, man, it's amazing to see it that high. So, but again, all the fundamental data is justifying this raise. Um, I can't, I can't really wait to. I mean, it's amazing talking to, we were like, oh, 50-50, and then we'll take a pause and see where we are, right? And we're like, yeah, it's definitely 75. Maybe we'll go a dollar, right? Or maybe we'll go 100 basis points. It's unbelievable to see where we are right now with this. So, yeah, all I got to say is, like, there are certain things, like when COVID came out, you're like, yeah, expect this, 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 and this to happen. Um, I'm just, it's like, I mean, I said it yesterday, but I'm going to say it again. It's literally like the Michael Jackson meme with the popcorn. Like, what are mortgage interest rates going to look like? It's like everybody that snagged one at like 2.8 is like a genius right now. And it's like, where is it going to go? Where are we going to end at the end of the year with mortgage interest rates? I feel like this is like one of those, not Deadpools, but you know what I'm talking about, where it's like, you guess things that, horrible things. What is it gonna look like? It's insane. Like we could have a housing crash all over again because nobody's gonna want to get a mortgage right now, right? Renting is gonna be. Talking about inflation. I mean, renters are gonna start jacking the price up in the air just because they're like, no one wants a mortgage right now. I already got one. It's cheap, right? I mean, that whole real estate investment arm. It's like, yep, it's. I mean, we're talking like hard money lending rates. It's unbelievable. So we'll see. I 11 today. Waller speaking. Um, due to speak at an economic outlook at the annual Rocky Mountain Economic Summit. We'll see. I mean, I, I don't know. We'll see where it goes. So anyway, a whole lot of stuff out there. Got one more day in the week tomorrow. Obviously, this is going to be a big one tomorrow as well. Looking at retail sales numbers. I mean, retail sales before the whole inflationary CPI story. Retail sales was one of the biggest, I'd say, top three numbers out there. As far as what I mean by the biggest, I mean the most important. And again, looking at this, the consumer is not slowing down, right? Showing retail sales month over month at a point 0.9, showing that this is good. This means that we're not getting the destruction. This means that we could have continued inflation, right? Because remember, we needed demand destruction. We need people to calm down. If people are still spending money, right? Obviously, it's not hurting the economy. We can justify a bigger raise and a bigger raise and a bigger raise. But the question is, when does the pendulum swing to the other direction too far, right? So, yeah, kind of some craziness there. Kind of some craziness. So, yeah, so we'll see. And then again, Bullard speaking tomorrow. Can't wait to hear what he has to say. Right? I mean, he's been the head honcho as far as what needs to be done and how much it's going to go. So yeah, I think it could be kind of cool tomorrow. But yeah, 8:30 tomorrow morning. I expect there's another big piece. And again, I'm almost wondering tomorrow if these core retail sales numbers are a little bit too strong. If that makes sense, right? A little bit too strong. I mean, if they are, showing that the economy is, people are not spending anymore because things were too expensive. I mean, as inflation continues to rise, I mean, could be interesting. And again, remember the core number is the big one, right? Right. This one is excluding automobiles. There's an exclusion for everything, but the core one I think is the big one. Again, autos is its own thing, but we'll see. And then again, Empire State Manufacturing was minus 1.2 last time. We'll see if it's negative again. That'll be they had this one big one. I think this one was kind of April kind of messed with people. I think, right? But again, miss. Forecast is negative. Could be bad tomorrow. So I don't know. Let's see. But again, look at this thing rallying. God, this is insane. This is just absolutely crazy. So let's look at these. So we had a little Harry Potter trade that we talked about yesterday, kind of pulling back again, and you can kind of see if we bring this across, right? It actually kind of picked up again. It came down and it based in that level, and then kind of pulled back again, looking for some more, basically more sellers, and then boom, just absolutely blew through. So again, these are always hard ones to take. I mean, the Harry Potter trade, we typically are looking for the base and come through, and then we like to push it and then come through. Unfortunately, this is kind of just that impulse correction based move, right? Impulse correction, impulse, and then it kind of base and then correct it back up again to grab more sellers, and then bam, slid right through. So you may have gotten into this one when it kind of broke below the low. It's 30 pips right now. I mean, we're not quite out, but we're really, really close. Um, you know, again, this is one of those ones where there's a lot of different ways to play these kind of continuations. There's more, there's more aggressive, there's more conservative. Some of them are like, hey, listen, when we do the pullback, we're looking for the base and the confirmation. Some people like the aggressive. If it comes to here and it pulls back again, it's like, hey, listen, I'm pulling the trigger the next time it goes through. It told me that this zone is blown up. It's trying to find sellers. If it goes through, you know, full send. And again, that's how you would have played this one today. Um, where this one ends, oof. This is a hard one because right now it's like, do you really want to get short the dollar? I mean, do you really want to fight the dollar at this point? And with that data today, I really feel like no. And we have a level down here that we're kind of looking for target wise. We kind of marked it off the 66.68. I think right now, really, until we hit this level, it should be actually be this. Until we hit that level, I think that's the next place that we look to see for this thing to slow down and turn, right? And again, maybe we have a 10:30 reversal today, but I mean, it's obvious that where this is really driving. I mean, since 8:30, I mean, it's just straight down. I mean, the news is and again, fully justified. Did exactly what it was supposed to do. Again, pulled up in price, right? Pulled up in price before the news, just in time to get it short. So, um, yeah, right now, let's see. Let's pull this down. In fact, I guess I'm going to pull it all the way down. I wanted to see if there was anything in there. And again, talked about this level, right? Obviously, our four hits is in, so again, we can remove this now. Pull that off. We don't need that. Let's pull this. We're going to leave that. Let's take this. Um, I'm going to leave it right now. Let's run some fibs from here and see where we can maybe get some help. Yeah, look at that. We're going to leave that level on there. Because right now, if we do stop somewhere in this range and start to pull back up again, that same 67.11 that caused the base here that we talked about, taking a breakthrough, that now becomes a 23.6. So watch that level. Again, like I said, versus the Aussie, we already talked about the Aussie going into potential recession. I think, again, it's really, really hard to say. We should be long this pair. Excuse me. Ugh. I got back. I played two lacrosse games last night. Got back, Jen was still bouncing around on the bed, so I don't think I got her to sleep until 12:15 ish last night. So I'm gonna turn into a pumpkin sometime today. So if I yawn, I apologize early. So, but yeah, I think 66, 68 again. Target first. Look for any type of basing. You may get a bit of a reversal on that one, and then see what we can do with it. Now, also, yeah, also had some pullbacks, and interesting enough, we did get a base in here, and it came back up. That 93.54 is a level we were looking at, and again, it based the base. It kind of pulled back again. It's like, man, it's chopping those levels. It's chopping those levels. And really, it went up and it blew through the second round and ended up going up and grabbing these this kind of, I guess the zone is more or less here, right? And again, do I love levels like this? No, it literally pushed it to the brink. Um, and if you look to see what it hit that again. So the 93.79 got blown through, didn't even slow down there. This one obviously slowed and then kind of gave us that same kind of violated zone base pull back down. So obviously this was a morning Harry Potter setup here. There and 1 to 3 is right there. So I mean you're already out of the position. So again, based in there, zone was violated, came up, grabbed another level. Wouldn't have loved that level, but again, when we came in based here again, and actually we could have changed this one around a little bit and done this. This was a morning setup. I didn't get into this one. Your 1 to 3 is sitting right there, which your profit should be. Whoops, profit should be taken there. So again, something you could be into. So yeah, so that's what you're looking at. Again, trades are already in. Not much we can say about it. Again, we were looking for a quick reversal yesterday, but it drove up and then ended up needing some more help. So right now, that's kind of where we're standing with this one. Again, we do have a level still way up top. Again, this one I would not be looking to short off of it. It's got 1 deep, 2 deep, and 3 deep in. I wouldn't be looking for that again. And again, I think profit target on this one comes down to 92.76. And I'd like to see it. I would really like to see it push all the way down. There's obviously some buyers in here, but that's the next really clean entry on the downside for this one. Okay. Um, Euro dollar. Obviously, the euro dollar is collapsing through. And again, we bounced back off. We came back up and grabbed those same levels, and then again, kind of maintained and stabilized. But with this morning, it's funny. The move actually started at 5:30 this morning. The European market at 3, right here, set it up, and then what happened? European reversal, and again, not really the easiest to grab. Right there, kind of missed it. 5:30 reversal, right? Straight up 5:30 reversal, and it's like, wait a second. Here's the 8:30 news. They were already moving. What happened? Well, they knew what the data was going to be, right? They ended up getting into it early, knowing that it was going to go there. So I mean, anybody that was able to play that European reversal, it's 100 pips. 100 pips this morning, right? Ah, I do love me some coffee. Yeah, 100 pips this morning from the 5:30 reversal. So you know, not bad. Not bad. We do know we have some levels coming in just a little bit below here. And again, I think were these 4 hour? I feel like these were 4 hour zones. Probably from daily. Yeah, they're from dailies. Um, there's some big levels. So I would say right now, again, we're already seeing a bit of a retracement back. And again, it's the market was already moving. Then there's the news burst, and now there's all the profit taking from the overnight. So we're seeing that the price kind of tick up a little bit. The hard part about this is these levels were formed so long ago. It's hard to look at 30-minute levels because we don't really typically have data that goes back that far. And again, it is a 30-minute level, and so much has happened from now since then, and it's been so long since it's been here. You could use your larger time frame levels, but using the smaller ones sometimes is a little bit harder. So we really need to kind of get a new established bottom here. And again, we'll pull some of these off just to make the chart a little bit cleaner. Um, let's hit what, one, two, pull that off. Looks like this is what we're dealing with right now. This confirmation, and you can see right there. There's your confirmation on this zone, and that's what we kind of tagged in the overnight. Pull this. We'll pull this. We'll pull this. Pull this. Yeah. So I'm gonna say that probably got something somewhat decent in there, right? 101.15. And downside, I'd like to see where we're gonna go. Not concerned about this level anymore. Again, that's parity. That zone is still there. Let's move this actually. Let's put this. What does middle look like? Right. Obviously, Kip's coming in here now. Oh, excuse me. Um, I'd like to see where the bottom is, but 93.35 or 99 flat would be two of those levels. We can run some fibs. People looking for kind of some near term early stuff, and maybe get a pullback. But I would say probably much closer to parity. If you're at 99, 94, most likely it's going to act as a level. Yes, ba 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 ba. Yeah. Um, most likely, again, probably this area is where that the selling would come in. I'm not going to throw red on there, but just keep an eye on it. I mean, based here, pop, 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 based in there again, and again, it's literally the proximal side of this one is obviously a parity. So look for a retracement again. It's moved 100 pips. There's obviously going to be profit taking in. There's nothing else you can say about it besides that one. All right. Now euro pound. Euro pound quite choppy. We did have a level up here at 84.80. We talked about. We missed it by just a little tad. It got real close. Missed it by 2.9 pips. It's like I still think that one's on. And again, the Harry Potter over here crashed through. Again, this one has already hit once, but decent strong movement out, and I think that one comes in one more time. So, kind of see where we roll with this one. Again, this one I would like to see where the new base is before we pull the trigger on it a second time. It's already hit once, right? And again, drop, based, pull up, hit it, and boom, all the way to profit. I think look to see where that one is. It may actually be a bit lower down here, but I think there's another Harry Potter. Right now, we're just chopping. We need some more data to get much out of the one. But 84.80 up top. Um, right. I think 84.80 is another attempt to go in here. And again, 84.83. I'm kind of getting more bearish and spare as we go. Euro yen. So euro yen went through the top, right? Deleted this yesterday. Um, let's see. So yesterday at 10:30, that was our reversal time, right? And again, we pulled all the way back. That one we had marked off. Um, here is your 1 to 3. 1 to 3 is right there. So you can see, got you out at about 1 p.m. So again, that one is out. Um, we ended up chopping through, but it was like one is two. I guess three is where it burst, right? And then again, here's your 50%. So it kind of came. You can see right there. Kind of use this 50. Now I do like the top of this one. I like how it came up. It was one candle base and a turn. I like how we have the ascending wicks in there. So that's actually, and again, still on the 50. Ba 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 ba. I hear you. Along those lines. So getting this guy's out. That is about 45 pip runner from yesterday. Okay. I'm gonna mark that one off. That one is out. I'm gonna pull. So if we can get a break at the 61.8, that's a violated level in here. Kind of curious. Actually, that could be a reversal for today. The 138.11. Yeah, 138.11 could be a reversal. The reason why I say if we take the most recent high to low when we actually have a trend, obviously this was a downtrend. This was the new uptrend. It is a violated zone, so we know there's something to it. It did bounce off of it before, and again, it kind of popped at base and kind of pulled back and then took off. And it is a 61.8. So I mean, it is a level now. If we come back down to people, we'll be looking at. It looks like it would require about another 63 pips. But right now, if I was going to put a top and bottom on this one, I would say, hey, listen, watch this top piece up here at 139.55, and then at the bottom 138.11. I think either of those two look good. Right now, we're kind of sitting in the middle. We're seeing some profit taking, obviously more associated with the end more than anything else right now. So look for that to pop down. So yeah, buddy. Um, all right. So we had some levels in this one. Let's see. Again, not surprised with what we had pull out. Looks like yesterday again 10:30. This green candle right here pulled right up. 10:30, we grabbed the 119.64, which was also the 23.6, and I know we mentioned this one yesterday. So here's your completed trade from again. There's your 1 to 3. It ended up going much deeper than that. Actually, right now it's down to a 1 to 10. So 1 to 3 was only sitting right there. But again, we talked about 10:30 reversals, 23.6, and then there's your 119. So you're out of that one. Let's see. Yes, buddy. I think we set this one up originally. I think we are clear all the way down. Yeah. In looking at this one, we know that this is the next time we had this really big spike, which this sucks. This 4 hour candle, this is obviously a news based candle, right? It goes down, comes back up, and opens and closes exactly again 4 hour window, opens and closes exactly the same with a huge spike like that. And again, that's a 200 pip spike. So yeah. Oh, tell mom happy birthday, Ernest. Tell mom happy birthday. So this one we know we have buyers stepping in at 116.43, or I'm sorry, 116.41. A little bit harder to grab, and again, my opinion on this one is kind of the same. It's been such a long time since we've been down there. We know we're kind of at the bottom of the fib area here, right? I think we keep this level on, right? Obviously, this one is out here. Let's keep it on because it didn't, and again, it was confirmed. It didn't go deep into there, and it turned. I think we can get one more out of that one. I kind of want to see. Actually, let's see. Let's run from fibs from there down. Oops. Nope. Not what I want to do. This one right here is what I want to do. We're almost at that 23 for a continuation on this one. Let's see. There's a level there. Hmm. That's interesting. I kind of like this one. This is hard. There's some stuff up here at the 50, and again, I'm on a small time frame just in case it seems like there's a whole lot of candles on this one. There's a level there. There's a level there. How much space we got in between here? All right. Again, we're probably going to get some downside pressure right now. This is too easy of a draw from high to low, right? Um, It's too easy of a draw from high to low, and being able to see this 23.6, and again, an initial push at 9:45 was straight back up again. Again, impulse correction, impulse correction. So probably going to be some short pressure coming in. We're going to remove this right now. Let's see. Really like to get a decent bottom in this one. How much we got to the downside? 114. I would say right now, I mean, I would say that I'm still really feeling the bearish aspect in this one. Again, I think there'll be some sellers coming in right where we are now. We have two levels of confirmed sellers up top. Well, not confirmed, but again, decent one top basis at least on the 15, and again the 118.63, 118.61. Um, I'd say right now, again, look for continued selling pressure in this one. We got enough of a pullback. We kind of got close enough to the 23.6. And again, the profit taking from news is already out. I would say look for it to come down. Unfortunately, I don't really have a great entry on this one. We don't have enough basing in anywhere in here. Again, we need a bit more of a retracement up, but yeah, I'd say again bearish thinking on the pound dollar. I think that the pound is just not going to do well in this one. So we talked about this one yesterday. Again, 11 o'clock. We talked about a potential reversal at 10:30. How's that for just missing? It's like it literally came down, and again, it grabbed these where these sellers happened here is what happened. Actually, I guess it got front run by a little bit, but there's your zone. Missed this one by 6 pips, right? Again, moves around a little bit more. And it had a nice pullback down again. So it's like, gotta hate when that happens. Right. The top level, though, your top level, again, this was an easy one as well. Huge push to the downside, basing. We know we had a lot of strength in there. That's what we tagged. And again, this one hit right around the European Open. The European Open window is here. So it launched itself up. And then by 4:30, it was already starting to reverse. This one is obviously already out. 1 to 3 is right there. So you're out of this trade, and again, now it's just continuing to move, in step with kind of pretty much all the all the yen pairs. So again, the trade is done for the morning already on this one. We just completed it. I didn't run fibs from bottom to top yet, though. Look at that. We do have something sitting there, but really, I think there's a level I'd say down here that is actually pretty decent, and it's confirmed. So I think there's probably a hiccup at the 51. I'm going to say there's probably a position right here at 163.17. Yeah, yeah. I mean, I would say right now that would be next area. If we get enough weakness coming through, it is confirmed it is at 61.8. So there's a couple things kind of enhancing your odds on that one a little bit. Um, but right now we're too far. I would say if we can get back up top, it didn't leave as fast as I'd like. But I would say that up top probably has one more short out of it, and that's right at 165.05. What? Do you need a toy? Here, you need a toy? Where are all your toys? Here. Do you want this toy? Do you want this? Yeah. Huh. Yeah. I'd say 165.05 is probably where we're looking for. But there's your top and bottom in the pound yen, 165.05, 163.17. I do like this one. This one is kind of like a little hidden level, but I love the fact that it's a 61.8. We pulled back enough. So again, impulse correction, impulse correction, impulse correction, impulse down again. I think we hiccup at 50. And then again, if we can get through the 63, 163.17, I think there could be a buy in there as well. Dollar CAD. So funny enough, dollar CAD just literally went crazy yesterday. Actually, I guess here's kind of again the 10:30 reversal. We talked about this. We talked about a target on it. It just since that time it has done nothing but go crazy. We were kind of waiting for it to kind of stabilize and kind of push down a little bit, but unfortunately it just went insane. So I mean again, we did get the two different trades, the short from here, the short from here, the target got hit, and then it just went wild. So we can pull all these short trades off now. And again, we had this 132 marked off. Interesting enough, this 131 got just sliced through at 131. It didn't even slow down there. See. See if we can find something on 2 hour. Problem is, the candles in this one starting to get ugly real quick here. Yeah, and that's what I mean by ugly. Can I see this on an hourly? Be great if I could. we're dealing with is there's a piece in here, and it's kind of a violative level. We can kind of see it, and again, not the strongest, but again, being a big psychological level, that's why we've kind of pulled back again. I think with dollar CAD right now, with as strong as PPI was, and the fact that again, oil is in the red right now, so again, we're getting that CAD weakness coming from it. I mean, oil's down to 91. Um, I think we're gonna have continued buying pressure on this one. Again, any strength that the CAD got from its interest rate, again, oil's getting just obliterated, down $5. I mean, 91. I mean, heck, I'm looking for like $3.99 gas this weekend. At this point, um, yeah, um, that may be way too much of a pull though. God, it's like 119. Yes, buddy, but it's exactly my thought as well. Hmm, let's go down to a 30. So there's where we're going to start seeing some pressure right now. I don't know if you guys can see this or not. So from the initial from yesterday at noon, right? Low to high push, new draw at the top, and we're sitting right there on the 23.6. So again, oil accelerating. I think that this one goes higher. Question I have is, can we get through 132.25? Yeah, I mean, right now both the fundamental factors are driving this one higher, particularly with retail sales. If retail sales numbers are good tomorrow, or even if they just come in as expected, I mean, it's a big jump. I think by the weekend, I'm obviously not one that is like, oh, okay, pull back 23.6. Yeah, I'm in. Woo! I'm just not typically one of those people. Um, Unfortunately, it's not necessarily a zone. We got some weird candles on the left, but I'm gonna say, I mean, my call would be that by the end of the week, I think we end up we're at 15, 17. I think we end up at 133 this week. By the end of the week. Again, it's about 140 pips to go. But retail sales is big enough. Again, this is driving oil continuing to deteriorate. Um, like I said, yeah, I mean everything out there. I mean, look at gold. Gold is down 2% as well, down at 17. So I mean, the push is on. I mean, the push is on. They are going to jack interest rates. Um, I think it's really hard to go against this one. So um, again, pullback level, but it's the same thing. Do we want to start getting short? Not really. Um, I just don't think that this one is not the best. There's not even enough really big move in this one. 60, so it's continuing to grind higher. Like I said, all fundamental factors are saying this one goes up. And we mentioned yesterday, we're in a racetrack right now. There's really nothing slowing this one down. We had that one little level here, but there was nothing to justify it. And again, it pulled back and it was into a base and then took off. So I think this one comes up too. Um, what? Hit the buttons. Hit the buttons. 78.6, I think, is probably your next target because there will be some sellers that step in there. Um, see if any of these line up to see if there's a decent. Yeah, there's probably here. There's a base sitting in there, so that could be a decent one. Yeah, same. See, we're pulling back to the 23.6. Yeah, it's the 23.6 that is really helping us on this one. But they all look the same. They're all pulling back and they're all starting to rally off of it. Everybody just fundamentally is just, come here. What? Oh, come here, buddy. Here. No, this is daddy, not mommy. Nope. We're not going to pull the mic. So they all look the same, but I think the dollar CAD has more fundamental factors than the dollar Swiss right now. And it is what it is. They're all the same. Um, all right, so we talked about it down. We got it yesterday. Again, that 10:30. It reversed. It didn't come all the way back down. It just gave you this quick little spike through to mess with people, and then push back down. And all it did was run right back to the basing level, right? I actually thought it may go a little bit lower than that, but it just went to the start of the move and then continued its pressure. So, again, we got the pullback, but not as far as we wanted. And again, once it broke, it wasn't going to hold again. The fact that it actually based here and then pulled back again gave us the little base and pullback. Kind of surprising. Um, no, 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 no. Yeah, look, that same level that it pulled back to. Yeah, we're gonna mark that one off. Here, this. Yeah, you got the phone. You got it. You got it. Um, and again, that's so far away. I mean, that's 137. So I mean, it's one of those things. I don't feel that we can put a top on this. I do like how this is a one candle base and we're basing it right now. So I mean, if you are looking for a level of risk, um, it's still 28, 38. I'm not interested in taking 38 pips worth of risk on this pair. So um, I would say the best way to play the dollar yen right now would be literally wait for it to pull. Look for a pullback tomorrow before retail sales, and look for another potential spike. This one didn't. Again, it's 8:30 here. This one didn't spike as much, but it's because again, here's the hello, hello, oh, there we go. Sorry, he's playing with the microphone again. Um, so yeah, this one didn't have a spike, but unfortunately, but I need the microphone. Um, it was already moving in the right direction, right? I mean, the Europeans were already setting in that direction, so when it's already moved that far, you're not going to see the same spike. As well as remember, always be cautious right now because raising the interest rates is going to affect the yen as the proxy. So it's kind of the proxy versus the dollar. And again, they're kind of conflicting at this point. So kind of hard to do. Bitcoin obviously taking on the chops, 2.6% down. Ethereum obviously looks exactly the same down. And again, this is all about raising interest rates. Bonds obviously took the gap down because again, that data is huge. They're going to raise interest rates, and Doji again still under 6. It did get a little bit of a reprieve yesterday, kind of parabolic retracement back up. Again, down 3% as justified. It's getting kind of hammered pretty bad here. So looking at oil because that's kind of where a lot of this craziness is. So again, with oil yesterday we did take a pop, actually 2 days ago, and then we just really kind of based in this. We mentioned that the 23.6 was going to be a level where we would see sellers. I mean, those purely technical fib traders, and it did. It came back up, and again, the Europeans just sent it back down. We based in the same level, and again, this is I think it's 4 is what this one was. But once we started basing, it's going to collapse, and it did. It continued to push lower. You know, People will say, well, why the heck is 8:30? Was there oil news today? No, there wasn't oil news, but there was the data that showed that, hey, listen, we're going to jack interest rate even more. And again, this is a forward-looking market. It's not about what's happening now; it's about what's coming in the future. And the oil market is screaming, hey, we're going into a recession. We're going into a recession. It's the only thing that really justifies it. It's just showing you that we're going to have demand destruction. And you know, this is on the back of China saying that they've recovered, right? It just goes to show that what the kind of forward-looking forecast is for the where this is. At this point, let's delete some of these. I'm going to be slower now because I have the boy again. And again, that target got obliterated. We're going to leave it there for a sec. Let's see. Let's look for some decent levels. Probably, buddy. I need that, buddy. I'll be lighty. I don't even know if this one will hold as much as it's been punched through. Um, hey, 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 hey. Jump the ground. Jump the ground. Hello, Jin Jin. Wow, everybody's coming in this morning. Jin Jin, Daddy put your play downstairs. If you want to get it, Daddy will turn it on for you. Or do you want Daddy's phone? That's what happens when Melissa gets a. They have some clients overseas, and she's like, I have a call this morning right at the middle. All right, so I would say these are two potential bounce areas. Wow, 89.91. Buddy, I can't mouse with that with you on that hand. 89.91, 87.37 or 36. Two potential bounce areas. Again, we are going to see some profit taking right now, and that's kind of probably what we're seeing. Just because there was such a large move. I mean, we went from what 95.21 all the way down to 90. I mean, $5 move from the 8:30 9 o'clock window. Yeah. So I'd look for today. I mean, again, I think we get a little bit of movement back up. Do we pull into this zone here? Wouldn't be surprised. Um, let's run some fibs and let's see where they're going to probably get involved in. Yeah, it's pulling back. They're right at the 23.6 now. So, I don't know if I'd be willing to just take this one as a retracement. It is a parabolic move. It is pulling back to the 23.6, but I'd be cautious with it because, again, we definitely had buyers that stopped it, and now it's up $2 off of that one. Again, guessing that we have a recession. This is a lot of movement. $5 and instantaneously. That's a lot. But I think if we can get at decent, if we can get at some type of a push, I think we get a base around 90. I think 90 is going to be a big sticking point. To be able to break through 90 would be, you know, quite a large push. So we'll see. Where I'd be willing to take shorts again, probably up in this area. Like I said, there's a base there. I expect we have a hiccup in there. Probably up here. It is more of the. It's a 61.8. It's between the 50 and the 61.8. So I like that level a little bit better for a short. But right now, there's not really a whole lot besides the invisible 23.6 really stopping this one for a retracement. So, um, and again, I mean, that retail sales numbers is kind of like, yep, everybody's having a good time. Let's go. Still, demand is still strong, but I don't know. I think the threat of a recession is just too much. Natural gas continuing to climb. We talked about 669 yesterday, and again, it tagged that level, turned, rolled, but it had stabilization already at that point. Um, Once you have the stabilization here, this is why we don't take these short, right? Buddy, what are you doing? What are you? No, you cannot have the microphone. He's infatuated with the microphone. You cannot have that. What'd you do with my phone? Did you throw my phone on the floor? Hmm? Here, with this? With this? What's that? What's that? So again, can't go short. There's not a 1 in 3 distance, and it came back down, grabbed that same level. So this one didn't necessarily matter. We pulled up, and the next level up top is going to be that 697. We talked about it a couple times this week already. So I think that's where we hit today. Again, it may temper down a little bit, but like I said, I'm not really necessarily interested in doing much until that 697. This is a decent level, though, one that we need to look at because, again, there is somewhat of a racetrack trade here. So if we do get some type of a short, there could be the potential for a Harry Potter right here, depending on what's going on at the time. And again, getting close to the weekend right now. I mean, there's your 1 to 3. If you look to see where kind of the spike was, we should be kind of clear here. There may be a little bit in here and maybe a little bit here, but that's really where the spike is, and we kind of blew it up. So there could potentially be a short right here coming down to here, right? Something along those lines, right? Not much, but again, I think the first short is going to be the 696. Gold. So interestingly enough, we talked about a breakthrough of 729, and guess what? We got it. It actually Harry Pottered, came down, it based, it pulled back. You can draw a triangle, and boom, continued push to the downside. So it's through. I'd say right now, again, we're still looking for this 1675 number, right? We're still looking for that push. But ever since that spike up yesterday, yeah, yeah, um, not much to say about it. Like I said, it was a huge number. It's down 1.8%, down $30. Yes, everybody can hear you. Yes, yes. No, they can't hear you. No, no, no. He's being cute today. Anyway, target is the same. Not looking for anything different. Looking for 1675. We're again, nice little Harry Potter at 1729. Neuro, I think you'd be able to get it for 1700 pretty soon. So yeah. Silver. Now silver taking it on the chops. We talked about a breakthrough of 1870, and you can see we got it. We came back down. We had another level that we said, hey, listen, it'd be kind of hard. This would be our target down here at 1839. and we did. We tagged the target, and now it's getting a little bit choppy. Hey, would you stop? Not necessarily surprised by it. As I said, the Chinese data is great, but it is still going to be linked with gold, and gold is getting obliterated. And silver is getting, silver is 2 times higher. All right, fine. Get on the floor. Go. Here, crawl around. Here, play with your jizz toys. Go. Um, so yeah, I mean it's double. That's what it's supposed to do. Not much to say, but there's not a trade set up right now. The trade was the break below this, and again, 7:30. Really, I mean, it's kind of funny. I mean, really, from yesterday it started it, but the European session started right here. So the Europeans started the acceleration down. It's kind of like they knew, right? Kind of like they knew. So not much you can do. All right, let's check the indices out, and again, all the indices should be deeply in the green. Or, I'm sorry, deeply in the red. Um, so today is the same as yesterday. When you have something like CPI or PPI or retail sales, you got to be very cautious with the open, particularly when it's a big number, and those were pretty big numbers today. 9:30 did nothing but kind of pull back, and we talked about this being a level, and you can see we hit it, came back, we hit it again, we hit it again, we based inside of it. So again, it was not a level necessarily we were looking to do much off of. Looking at purely the 15-minute chart, okay, here's where your 9:30 was, right? You could say that, hey, listen, there's a level of basing right there. Your 9:30 opening here, if it pulled up, yes, that would have been an actual entry for this morning, particularly with the data. It is justified based off of what we saw. Let's put this on there, and our 1 to 3 is sitting right there. So not quite out yet. It almost is, but again, 1 for 1 as far as triggers go. And again, you got to be cautious. There was not a monstrous 8:30 move, but it justified that, hey, listen, this is probably going to be more of a negative day. If we can get a pullback into a zone, which we did, again, there's your level of basing. There's your top and the bottom, and then it rode it, and then touched it again. So that's why we used it. It touched it again here. Again, you're pretty deep into that one. So again, 3/4 of the way, this would obviously be a free trade. You're not losing money on this one, unless suddenly it gaps. But you may have actually shut it down at this point already, anyway. But pretty close to the 1 to 3 already. And Q look very, very similar, right? Again, on a 15-minute, if you're looking to see where the basing was, we actually, this one, the 9:30 kind of opened in the base. So this one, I think you had to draw here. Talk about how, hey, listen, there's your base. There's where it keeps turning around in the overnight, right? 9:30 actually opened here. Actually, 9:30 opened here. It did come up and touch it, so it's the same exact trade, more or less. And funny enough, it's the kind of the old 23, but I don't need it anymore because it went all the way through. This one looks pretty much the same, but this one is out. 1 to 3 is right there. So this one's officially out. So 2 for 2, right? 2 for 2 on entries, and obviously a worst case break even, and then one's already out. 1 to 3 on the second side. Okay. Actually, this one may be too. It's close. It's so close. So same setup. And again, is it turning where it should? Yeah. I mean, technically, that's where you're going to see buying, and that's exactly what it ran into. So this one matched up perfectly with the 1 to 3 to the downside. And again, remember when you're setting your trades, particularly the opening ones, make sure it has room to run before it runs into an opposing zone. And this is proof why. We know we had it here, and it literally came down and turned right on that, right where the buyer stepped in before. So, but the 1 to 3 made sense. YM. Our target was here on YM, and again, you can see yesterday target got hit. It did Harry Potter off of that target zone, and I don't think it made it all the way down. No, it did make it down all the way. So this one actually would have had a trade. Again, 8:30 kind of popped this in. 9:30 is here. 9:30 was unfortunately not in a zone, and again, if you used a previously violated zone where it touched, it would have been the highest part. So YM was not a trigger. You could have obviously taken it off this old target zone because, again, dropped, based, pulled back, did exactly what it should have done for the Harry Potter. That 1 to 3 is actually in. But again, when we talk about indices, we're talking about really kind of trading the open with a 15-minute setup. This one, unfortunately, was all the way down here. It was not in the middle of it was in the middle of nowhere and in between two zones. So nothing, not really what we're looking to do, right? Um, I still think 30,000 is going to be a big one. If we don't hit 30,000 today, I think 30,000 is the target for tomorrow. Because again, retail sales numbers come in. That's great. I mean, it's great that they're buying, but it just means that they are going to jack the heck out of those interest rates. So Actually, wouldn't be surprised if we do see a little bit of a reversal today. YM is really kind of the second weakest, but as far as opening goes, yeah, great Harry Potter trade, and that is done. But opening print, nope, would not have triggered. Um, let's run this all the way down just for later. Um, yeah, this one would have. Again, here's your 9 o'clock or 8:30 spiked up. Okay, your 8:30 or 8:30 spiking up tells us that there's your level of basing, right? There's your level of basing. There's your confirmation of it. There's your open at 9:30. We came up, we grabbed it, and obviously pushed away from it. So this one is also out. 1 to 3 is right there. So again, you can see well past this also. So out of the 3 trades, 3 out of 4 triggered. Right, 3 out of 4 were opening triggers. Although the other one did have a Harry Potter about an hour and a half, 2 hours beforehand. But again, as far as the 15-minute setups at the open go, 3 out of 4, 2 out of 3 are already at full profit. And ES is kind of fluctuating around. You'd probably have it locked in at this point. And again, you got super close. It actually made it to a 2.87. So yeah, super close. And again, maybe depending on how you do this one, if you didn't use the whole area, um, maybe you probably would. If you didn't use the whole area, you didn't get triggered. So maybe you were 2 on 4 on the opening prints, right? Maybe you were 2 on 4, which you'd be 2 for 2 as far as trade setups go. If you did mark the whole area where the test came in, then again, it was 3 for 4 from the opening prints. One is stop loss at break even, or obviously get something out of it, and then 2 were at full profit target. So either way, a lot of opening prints today. Got here. Twitter's got room to run. Um, Apple's kind of stuck, and Tesla, where it is where it is. All right, that's it today. Like I said, tomorrow is a big day. Retail sales is obviously a big one. Um, again, I'm almost wondering if these two are. I'm almost wondering if these two are just too far. Right, these are too much. Um, we'll see. I mean, again, retail sales is a big one. If the consumer is still spending, that's great. If the consumer's not spending and inflation is going higher, that's also kind of a big telltale sign of a kind of a red for the overall indices tomorrow. So there's some interesting stuff out there. I think there's some great trades. A lot already happened this morning. Again, kind of the same thing that we saw yesterday. But a lot of the things we did mention, if they did do it, again, there was great 10:30 reversals yesterday. I think we can get those today. So, all right, let's go ahead and do the drawing. Will won yesterday. Ernest put his 2 in, which is totally fine. You guys can jump in, buy tickets, and bounce out. You guys don't need to be here. Obviously, he doesn't accumulate when he's not here. But that's it. Let's go ahead and draw this. Let's close it down. By the way, I did get a message yesterday from Briggs. He says hello to everybody. He's been working. What he's doing now is he's working until basically 1 o'clock. So he's been trading the European Opens. He's going to try to start catching sessions or at least watch the replays on Tuesday, Wednesday, Thursday. So we will hopefully get him back as well soon. Um, Obviously, no Sean today. Like I said, Sean's enjoying his 3 months of awesomeness. And actually, my boys they're on their way to the airport now. They're going to Michigan for the next 2 weeks, so they will actually be. Asher and Reese will be in Sean territory. They're very, very within close proximity. So yeah, we'll see how that goes. Anyway, let's go ahead and do let's do the drawing. Will won yesterday, so Will's going for 100. Everybody else going for 25. Winner of today's drawing is. Wait, did Will bought 2 tickets? Oh, it's Nora. Nero takes it with 22%. And again, it was equal. It was equal footing. So, all right. Let's. This is why Will's like, I'm not buying extra tickets. Not buying extra tickets. So let's give Nero his 25 right here. Let's go ahead and give you right there. There we go. Ooh, I know, Debbie. It's like, how does Nero do it? It's probably it's Debbie. I would say it's probably more karma. Like everything in life is about balance, right? Neuro is one of those guys that loves buying, you know, things like gold and silver, right? Right. So I mean, we'll just put this here. This is called, you know, this is called, it's karma for neuro. I can't even on a daily basis. It's kind of like, wow. So I mean, if we go back to I gotta go farther back than that. So wish can I hide everything? Is there a way to hide? I don't want to remove them all. I guess I can remove a lot of them. But you can see where price is. I mean, basically, Neuro's been purchasing it from here, and now again, not bad. I mean, again, he's in this for the long haul, guys. But this is Neuro's been dealing with this. I mean, he's got more room to run, so I mean, he can't be really, super angry. I mean, it could be at 11 right now, but he's been acquiring. Neuro is dollar cost averaging, and it's just the universe kind of balancing out. Not that pip chips have a long-term return or anything like that. There is no dividend or anything associated with them. Pip chips are not a hedge for inflation, but it's the universe trying to tell Neuro, or, trying to help Neuro out. That's all it is. That's all it is, right? So this fix is going to get jacked tomorrow. So that said, I'm out of here. If you guys need anything, shoot me a message on Discord. If not, I'll be around tomorrow. I'm trying to get confirmation whether morning show goes live or not. I sent a message today. I'm like, hey, are we going live? Are we not going live? If we are, need to know, right? Need to get those passwords and everything set up. So, but that's the plan. I think we're going to be back next week for morning show. But I'll get all the rest of that information today, and I'll get that info for you guys. All right. So with that said, I'm out of here. You guys have a good one. Take care, and I'll catch you tomorrow.